Hello everyone, this is TobeTada with another video of crypto trading. Thanks for checking by and let's dive right in. So for today I want to give you 4 tools in a way to predict market behavior. Of course these are probabilities, so there is not a 100% way of predicting markets. The first tool is trend lines. So you can see I drew in some trend lines in this chart and there are some trend lines up here. I want to point to this one here and this one down here, which gives us an idea where price could be moving in the short to mid-term, and that is definitely pointing downwards here. Contrast that to the trend lines I drew here, which show an upward movement. I also drew in a support line here, so you can see that the price, by connecting the lows here, is basically being supported by this support line here. And you can see here we're at a very crucial moment, about 10,156. And if this is broken, we're very likely going to see a strong correction downwards to about perhaps short-term 9,000. Also, of course, we have the psychological barrier of 10,000, so that's going to be also important if that gets breached. So that would be the first tool, the trend lines. The second is, or relates to Elliott wave theory. So you probably already heard about this, and I'll just give you the basics. We have, in Elliott wave theory, we have a 1, 2, 3, 4, and a fifth wave for the upward phase of a market movement. So a 1, 2, 3, 4, 5. And the correction would be A, B, and a C. Probably going down to about 7,500. Roughly speaking, A, B, C is the correction. Upward is a 1, 2, 3, 4, 5. That is basically the second tool, and that gives you already a pretty good idea that we're going to see a correction, because right now we're in this C phase of the correction. If this turns out to be the correct way of mapping this, and very clearly you can see we have this fifth wave reached. Of course there's a probability that we're going to see upward movement, but in today's video I give the reasons for why I think we're going to actually see a further decline in price. So first was the basically trend line. Second one was the Elliott wave theory, whereas we're in this correction phase now. And then of course we have fractals. So if we get rid of these waves here, you can see that we basically have also had the peak of 2018, in which very clearly you can see a similar pattern. So what I mean by that is that this image right now of the market movement of Bitcoin represents more or less the fractal of Bitcoin. Now I've cut that off a little bit because there was no more data here in this on this website here, but it's basically, its characteristic is a strong upward movement followed by a longer downward movement. And so we have a peak and going down again. Now if we look at this peak here, we can see it looks very similar to the peak we're in right now. So you can see we have basically this upward movement, correction, a smaller second peak, and then a further correction, which is basically what we're seeing here. First peak, a smaller second peak, which in my idea would be this peak here, and then going downwards, which would be this part, and perhaps this wave here could be this wave here. Now of course these fractals never repeat themselves 100%, and also they can change somewhat, but the basic pattern remains. That's basically the idea, and that also gives you an idea of where we're right now in this market movement. And because we're seeing this resemblance, we're pretty likely to be in this correction phase as well. So this is the second way of determining this, or I guess another way of determining this. And I guess there is another tool I'll give you, which is the Fibonacci tracement levels, and that is basically seen if you draw in these Fibonacci lines here. So that would be going from a 0 to a 1, and we have these different ratios relating to a Fibonacci sequence, and we basically see in the past, which I'll show you when I zoom out here. If we look at the past movement, we see, of course, here something quite similar. So what I mean by that is when we were in this first, second wave, third and fourth wave, we saw that there was a strong increase in value, and this correction was basically going down to this 0.618, and very, very clearly. So that is quite significant, and you can do this with also subwaves here, that the price normally recedes to this 0.618 level here. And I mean, this is a textbook example because it exactly reaches its low at this level. And so I think this is a very good way of basically determining future price. So when we look at the low here and a peak here, we see that this 0.618 ratio is here, which would give us a price of about 7,800. Now, of course, this could go down to 7,500, maybe even 7,000, or stop at 8,700. It's not exact science, but the idea is that we're going to see price levels of about 7,000 to 8,000. And also, if we look at, of course, at the past movement, we have also support coming from this level. If we look at here, this, which is also marked by here, for example, the next support would be coming from down here, about 6,300. However, that would be quite a bit lower. And you can see that if this holds true as A, B, and a C, that would give us a price that would actually also match this support from this trend line here. That's also important to keep in mind if we connect these tools here. So basically we have a B, C correction, and the C correction pretty much exactly falls on this support line here and coincides with this 0.618 ratio here. So that gives you a pretty good indicator that we're going to see a price of about, let's say, 7,500 to 8,000 here. After that, of course, I'd be expecting a further increase in price. So I think these might be helpful for you to predict market movements. Give me or let me know if you found this useful. And I'm just seeing, no, okay, that should be all right. So see you next time. Bye.